Hey everyone, really excited about this video today. As you know, I've been pushing you guys to share your charts with me, tweet it to me, @helpwithtrading. And so I have 3 charts today that I want to go over, and I think there's really cool lessons to learn from them. So let's get into it now. Hey everyone, and welcome back to the channel. I'm DD Trader, and we're going over some charts today. Some of my subscribers have sent me their charts with some analysis questions, and I think there's some cool lessons to learn from it. We'll try to keep it quick. If you're interested in sending your charts to me as well, @helpwithtrading, maybe I'll do like one a week if we get enough of them. I could respond not on a video to you personally, but if I see that there's like, 3 or 4 good ones, then we can make a video about it maybe once a week because it's a lot of fun. And I want to build this discussion in this community, so we'll get into it. Also, just before we get into it, the trading course, the free trading course right now for all my subscribers, helpwithtrading.com. We are up to over 400 new registered users in the course. So we're really building up fast. It's a great course. I'm getting a lot of great feedback. So join in, subscribe to the channel, and check out this course. So let's get into it over here. So first of all, we have this trade over here. Hey DD, this is the USD JPY 1 hour chart. I made the 4-hour channels like you taught, and I'm in trading from the top. Cool. I'm in the trade for 18 hours already, and it's not breaking down. Do you think this is random or am I missing something? So I understand that idea of like, oh, I'm in this trade for 18 hours, like what's going on? It's like your heart goes up, your heart goes down, your heart goes up, your heart goes down. So how do you handle that? And let's see, so like I actually brought up this chart as well. And guess what? If you see my weekly recap from this week, I made a very similar trade to this. This trader got in a little bit before me, right when it was going down. So, but I think you missed something, and this is what you missed. Right here is a 4-hour support and resistance. Like, look at that. And over here as well. Now, I don't see that on your chart. You didn't have that, and that's why it kind of like is ranging around this. I do think it was a great move, and it was also looking over here to get in, and those are 2 bearish candles. But we're definitely going to, really maybe the whole channel has to do with this 4-hour support and resistance. So, you got to be careful. I hope you stayed in because it definitely did break down like you saw, like I took that trade. So that's what was happening over here. You have that 4-hour support and resistance zone, and the market doesn't know what to do. So I actually got in, not over here, I got in the 15-minute. Yeah, so after we, kind of pulled up and then we were fading out with these 3 wicks and then made actually like that bearish candle. I got in, nearly got stopped out as well, but it ended up being a very profitable trade to me. Actually made like $8 on that trade, which was awesome. So I think that's the point with your trade. You gotta make sure, even though you have the channels, very important to make sure that you're keeping on top of those 4-hour zones of support and resistance. So let's go on to the next one. Hello. EU 15 minutes, okay. My risk-reward ratio wasn't great here. Is that okay? Is it a good trade according to the channel method? Why did it break later, do you think? Should I have held? Okay, a number of questions over here. So let's see what your risk-reward ratio really was, because I see, where you got in and where you got out, and I did that over here. 1.15 to 1. So, I can't really decide for you. Really, according to your method. If you're going to trade my method, I'm not sure that that's going to be enough. If you have your own method and you proved that 1.15 to 1 is good enough for you and you could be profitable, that's awesome. I mean, even if you have, less than 1 risk-reward ratio and you're profitable, do it if you proved it to yourself. But I like to go for bigger than that, bigger than 1.15 to 1. Now, why did it break down later? Is it a good trade? And should I have held? So let's take a look over here. So yeah, it did break down later. I think it was, this is the channel. Like I understand that. It was a second hit. You saw that the market wanted to push down over here, came back up and had that big bearish engulfing candle. It's just not enough room. Why did it break down? This is why I think it broke down, because you could look at this as like kind of like a double top. And then after you have the double top and it's breaking the channel, then there's going to be a lot of sellers coming to the market. Now, it's possible that the channel was here. You never know. This is only a 15-minute chart, but I understand why you put it over there. And I think it was a solid trade. Obviously, the risk-to-reward ratio is not enough for me. I can't remember the last time I made a trade with a 1.15 to 1 risk-to-reward ratio, so that's not something I would do. But again, that's really your choice. And why I think it went down is because even, this is the double top, even though this second top didn't go, all the way up, but look how it's exactly by this support and this resistance, over there. So I think that it just needed a little bit more. It needed a little bit more of that test after this push down all the way from the top, and that's why it broke down. Let's go on to the third one. Okay, hi. So Aussie Frank, 1 hour. I waited for the break of the 4-hour zone, and then the retest and continuation. Why did it stop me out and then work? Okay, so first of all, because the market is random. So that could totally be the answer. Why did it stop me out? Because no trade is ever, 100% foolproof, and that's it. That's enough of an answer. So once you have that, and then we could take a look at the actual trade and see if there's another reason, maybe something you missed and whatever. So let's go into that chart. Now, I kind of drew out this trade over here, nice risk to reward ratio. I get it. Here's the 4-hour support and resistance. I had that also. Yeah, you see that? Very strong support and resistance right there. That was big support, 3 times, pushed the market up. And then it's really been around that area. So nice job over there. Now let's get back to this over here. So you said that this was a break and then actually, the way I'm seeing it, my support is a little bit lower than yours, but that's fine. Yeah, you're a little bit higher than me. It's still okay. You have the zone. It's a zone. Now, so it kind of tested. I hear that you got in. That was like, that bullish wick. But then to get in right there, look, this is an hour chart, right? So that means you have 1 hour, 2 hours, 3 hours, 4 hours where it couldn't break above this zone. And then it pushed down. And you're right, you did have the bullish wick right here at this point. So it's showing you something. Was that enough to have that bullish wick and then that like kind of small bullish candle? I would say maybe not. I'm not saying that, oh, I never would have gotten over there. That's just such a... No, like it's possible I would have also gotten there. But I could understand, in looking retroactively why the market said, hey, that's not enough of a move to really push up. I want to see more. And then in the next candle, it was looking bearish again, like we couldn't break this zone. So maybe the right move would be to get in like only here after it broke that zone. Let's see if that would have actually made it. Let's say you would have pushed it up here after that zone and covered even down here, let's say, and started at, something like, let's say that. So let's see. Yeah. Look at that. It did. So obviously, and retroactively looking at it, that's the best trade right there. Now look at this. This is something I have that you didn't have. Let's look at it really in the 4-hour. So you see here in the 4-hour, like I have this little triangle thing going on, and it's kind of at the same zone. So like we're pushing up, we're attacking this zone, and then also we broke, this kind of like trend line triangle thing, broke it, really couldn't get advance. Then in a 4-hour candle, went back. This is, kind of like what got you out. This 4-hour bearish candle, which was a bullish wick. So that's kind of like the retest. After we broke out of this triangle, we broke out, but it wasn't so strong. And then we had that retest with the bullish wick. And then we finally broke past this zone with that candle, and that's really what it was. And it actually provided a 2-to-1 risk to reward ratio. It's a 60 pip trade, so it was a good move. And it was before this high, so you got out before this whole cluster over here. That would have been a smart trade. So, you know, I'm hearing your idea over here to get in, and you know, it totally could have worked. Again, this is random. It could have worked. It could have been so strong. I'm just looking retroactively and seeing that maybe, you know, especially with this triangle thing over here, and you know, the way you did it, like, wasn't enough for me. This just wasn't enough for me. Guys, that's what I'm seeing over here. I love this video. I'm really happy you guys shared these charts with me. Send more. I'm interested. Add help with trading. Share your trades with me. I'll go over the market analysis. I hope this video gives you value. If it does, then please like it and subscribe to the channel. And obviously, put on that notification bell so that you could see your trades being analyzed by me right here. Till next time, guys. DD out.